Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. Hello, Profit Hackers, and welcome to another episode of the Contractors Profit Hack Show, where we dive into the details of how to actually put money in your pocket and make it worthwhile for you to actually own a business. We've been talking last episode, well, it was a couple episodes ago before the interview with Dan Ravisto. We were talking a little bit about the AP and cash disbursements policy. We introduced that and kind of started talking about it. And I have a whole list here of items to go over that are part of the AP and cash disbursements policy, right? Different things that we need to touch on and make improvements on. And I decided it would be really boring to just go over each one of these one at a time. So I'm skipping forward a bit. And I'm just going to cover all AP and cash disbursements in just one episode here, right? So it's not boring. Because we don't need to go into that much detail on all those other things. So let's just jump right in here. I want to start with a story. Have you ever seen a horrible catastrophe unfolding before you, and you know in your gut it's coming, and you've been warned by friends and family to make changes to avoid that catastrophe, but for whatever reason, you just don't, and then it ends up coming true? I had a situation like that with my one of my competition soccer teams. It was my youngest daughter's team, and it was the last year that I coached her. She's in college now, so she's not doing that anymore. But tryouts came around, and I was kind of desperate because I felt like we didn't have quite enough people on the team. And this one gentleman that I knew, we grew up in the same neighborhood, and I knew his family. His younger brother is amazing and takes care of my brother's family, and was best friends with my younger brother. But anyway, so I knew him, I knew his family, and I saw that he was looking for a team for his daughter that was our age. And I said to him, hey, why don't you bring her on over? She can try out here. So she showed up, and she was okay. She could hang with our team, definitely. Wasn't necessarily a huge contribution, but I really felt like we had to keep her because we didn't have, I felt like we didn't have enough players, right? Well, my wife saw him talking to the different parents. The dad saw the dad talking to the different parents there at the tryouts, and heard what he was saying, and told me, hey, this guy is bad news. You really shouldn't bring his daughter in because it's just going to be bad news for you. And he's going to undermine you all season and cause all kinds of problems. Well, I didn't listen. And for those of you out there that don't listen to your wife and their intuition, I feel bad for you. I feel badly for you because I get proven wrong so often based on my wife's intuition. So you'd figure that after 26 years, I would do a better job of listening to her, but I didn't. And the season started. And as we went throughout the season, he continued to talk to parents behind the scene, and he started holding training, or what did he call them? Conditioning practices outside of my practices. And my wife told me, you really need to be there and assert your leadership and make sure everybody knows that you're still the coach of the team. Well, he continued, and he kept telling people what a great coach he is and how he could get them into college and how he had so much experience with that, and how the club that he had worked with had so much more money and was so much more support for the teams. Needless to say, the next year when tryouts came around, the majority of the team followed him. I'd stayed quiet the whole time. I hadn't defended myself. I hadn't put him in his place, and things ended up ugly, right? My daughter ended up having to switch teams and go to a completely different team because we didn't have enough people. So initially, I brought this young lady on to the team because I was afraid that we weren't going to have enough people. And in doing so, I fulfilled a self-fulfilling prophecy, if you will, of that. I want to compare this to construction and owning a business. With the business, there are different processes that as you grow and become better and better, you have to be able to hand off to other people, right? And sometimes because you're so bogged down and so busy doing other things, and people are trying to do what's best for them and for the business, a lot of different practices can end up being created that don't benefit you and are not the way that you want to handle your clients or your business. This often happens with your accounts receivable and accounts payable policies, right? And we've been talking specifically about the accounts payable and cash disbursement policy. And if you don't have a tight schedule around what needs to be done and when, then people are going to start making up things that make the most sense to them and to the business from their point of view, right? And so that's the reason that we need these different policies, especially the AP and cash disbursements policy, because you want to make sure that your goals are being met with your cash flow and that you are ultimately in control of how your cash goes out of the business, right? So to do that, we already talked initially about the authorization, right? And how to set up that authorization within your company so that everybody knows whose responsibility is what, right? Here are some other items that we need to make sure and include in a good accounts payable and cash disbursements policy. And again, rather than hitting these one episode at a time, I'm going to just jump through all of them and quickly explain. so that it doesn't get too boring diving into the minutia, because I'm sure you're not interested in all that. And you can always hire myself or, another good person to help you put together a policy like this. So to start, we want to have a good policy around processing bills, who receives them, who records them, how they're tracked, how you keep up on all those, with like an accounts payable aging report, those type of things, right? You want to have a good process in place for that, how that happens. The next thing that you want to make sure that you cover is an approval process. So we already talked a little bit about authorization. Authorization is who can do what within the company. The approval process is a little bit different, because as checks or payments go out, somebody has to be able to approve those payments to make sure that there is a second set of eyes looking at all those payments going out and being able to make sure that your goals and your cash flow priorities are maintained, right? So you got to have a good approval process in place and decide who it is that you trust to approve those different processes, to approve those different payments, right? The next item on our policy is payment terms. What are your expectations from your clients? Payment terms oftentimes can be dictated by a general contractor or a bank, something like that. You don't really get a ton of say in how those payments are going to come to you and when. But when you're dealing with residential or smaller commercial projects and you're not working with a contractor, you need to set up what your expectations are as far as when you get paid. Obviously, the sooner you can get paid, the more it helps your cash flow cycle, right? And so we want to be in control of that and dictate when you get paid and what happens if people don't meet those terms, right? As far as fees or penalties, those kind of things, right? The next item we have on the policy is cash flow considerations. So we talked in a previous episode about our bill pay strategy, right? And protecting our cash flow at all costs. We want to, in this process, make sure that we set up our strategy for managing our cash flow as part of our policy so that everybody knows what gets paid first, what gets paid next, and how we protect our cash flow, right? So I refer you back to the bill pay strategy episode for more details on that and what needs to be included in this part of the AP and cash disbursements policy. The next item is mechanics lien rights. Each state has their own rules for mechanics lien rights. And what a mechanics lien right is, for those that may not be aware, you usually have it covered very quickly in your contractor class to be able to get your license. But to cover it again here really briefly, you have a right to be paid. And every state has a way of maintaining that right for you. There are different things that you have to do to maintain those mechanic lien rights, right? So with a mechanics lien right, basically what it is that if you are not paid, then you can file a lien against a property, the property that you did work on, right? And that lien prevents the owner of the property from being able to refinance, from being able to sell, any of those kind of things without paying you off in the process, right? And so you can actually, in some states, you can force a foreclosure within a certain period of time if you've filed your lien properly and they continue to not pay you, right? So it's a little bit of leverage and a little bit of a way to protect yourself. And it's also a great way to protect your suppliers and your subcontractors, right? If you make sure that you're communicating with your supplier and with your subs, and you're letting them know, hey, I haven't been paid for this project yet. That's why I haven't paid you for this particular invoice. And you keep that communication open and work together, everybody can make sure to file their liens correctly and maintain those rights. And it helps everybody to be able to get paid, right? And so you really need to make sure that you work together with your supplier, with your subcontractors, so that they know that, number one, we already talked about the bill pay strategy, but number one, you pay when you are paid, right? And then let's move on to the next one, which is segregation of duties. As you grow, you want to separate out some different things to help protect your money from growing legs and walking away, okay? A good example is that you want one person to open the mail and maybe record the check and then have a completely different person that deposits those checks, right? And in fact, if you can break up all three of those steps to three different people, it's even better, right? Because the person that opens the mail knows about the check and they can follow up and make sure it was deposited. The person who records it now is recording the correct amount. And then the person that deposits, all they do is deposit it. They don't have access to the system at all. So if that deposit doesn't show up and there's no match to it, then there's a way of making sure that that check was actually paid, right? And so when it comes to accounts payable, this segregation of duties relies really heavily on the authority or authorization that different people have to do different things, and also on the approval, right? You want one person entering the bill. You want one person preparing the check. You want a third person signing and sending the check, right? And when you do that, you're protecting yourself and you're making sure that the payments that are going out are, number one, according to your bill pay strategy, and number two, that there's no embezzling going on, right? And believe me, I've seen a ton of it. There are a lot of good, honest, hardworking people that get a little bit disgruntled and that have an opportunity and make bad decisions. It can happen to anybody, right? So make sure that you have a policy in place for this to help protect how your cash is going out the door, right? And separate who's doing what so that you can protect that cash. We talked a little bit about record keeping. We use QuickBooks Online for all of our clients, and it's a great tool for record keeping. We also use some other tools like Builder Trend, Service Titan, Jobber, Drip Jobs, Job Costing Plus. There's dozens of softwares out there, right, that you can use to help on the job costing side of things. And for that, we want to make sure that we have a procedure in place so we know, does it get recorded initially in QuickBooks or does it get recorded initially in Builder Trend or Service Titan, right? And that way we have a correct flow happening so that the connection with QuickBooks and the books in both QuickBooks and your job costing software are the same, right? We don't want there to be differences there, and we want to be able to tie them out. So that's super important. You want to have that process written out on how it gets recorded and where. Okay. Then we want to talk about vendor relations. I mentioned earlier about working together with your suppliers and your subcontractors, all of your vendors, to help them to be able to maintain their mechanics lien rights. We also need a policy where we are firmly establishing when you pay those people, right? And we want to have a policy in place for negotiating better terms and better pricing and all those kind of things for our different vendors, right? We want to make sure that we have a communication open with them so we know what the next level is that you have to hit in order to get better pricing or better terms, right? We also want to have a policy in place for how we apply for accounts with those different suppliers, right? Because having accounts is super important for helping to protect our cash flow. We need to have compliance and reporting in place, meaning a simple write-up about how the record keeping needs to be to generally accepted accounting principles, those standards, and how we do our own internal job costing reporting, all of those kind of things, right? We want to have that written out so that everybody understands why we're doing the record keeping the way that we're doing and what minimum standards we have to meet with our record keeping and our reporting. We want to eventually, as you get larger, have a system in place where you can audit and review the bookkeeping. Now, if you are outsourcing this to somebody else, like to us, for example, we do periodic audits and reviews and reconciliations to make sure that everything is looking good as far as payments going out, bills being entered in, paying when we're paid, maintaining those different strategies, right? So that's important to have written down. Who does that, when that happens, how often, how it happens, all of those kind of things, right? And that helps, again, protect you and make sure that your standards are being met as far as cash disbursements and protecting your cash flow, and also protect money from growing legs and walking away, right? Embezzling. We also need a policy in place for subs that talks a little bit about the requirements to work with us. So like a master contract, we need a W-9, we need a certificate of insurance, we need a workers' comp certificate, all of these kind of things that the documentation we need from them before we're going to pay them, right? Also, we need it very clear that any change orders have to have a written approval and a new estimate to show the change in the amount of time and the dollar amount, right? And it has to be signed by the customer, right? These are some policies that we've got to have in place to make sure that we're covered and that we're not going to be paying for things that the customer is getting for free, right? So that is a quick summary of some different things to include in an accounts payable and cash disbursements policy. I know it's not super exciting. That's why I wanted to cover it in one episode. But make sure that you know what's going on in your business and that you are controlling what's going on in your business through these different policies and through the audit and review process so that you don't metaphorically lose your soccer team, right? Because you're not in control of things there. So thank you very much for listening to this. And we have one more episode on AR and cash receipts policy. I'm going to cover that whole thing in one episode as well. So after that, we'll continue on into some more interesting stuff. But this stuff is super important to have in place to have a healthy company, right? And you can do this through ChatGPT. You can hire someone like myself to help you create this. You don't have to put all these details together by yourself, right? You can get help to do it. So keep track of that cash flow. Make sure that you're getting lots of green M&Ms to put in your pocket. And I will talk to you on the next episode. Thank you very much. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.